Hey everybody, good morning. It's Rick Mount with Paradigm Mortgage Group bringing you this week's market update. There's a lot going on out there, so let's jump right into it and see what's happening. So this week's market update brought to you by Mike Hardy and Rick Mount. Check us out at www.mikeandrick.com. Let's look at what's going on last week. Happy Thanksgiving holiday. Hope everybody enjoyed some turkey and Black Friday. Now let's go shopping. Many retailers seem to open earlier and earlier each year, and we'll see when the numbers come back in if we set a record. Last year's spending totaled $52.4 billion on Black Friday. So again, we'll see if we can top that. Let's talk about what's happening in the news. Federal budget, danger, fiscal cliff coming our way. Hey, let's talk about this. Federal budget was estimated at $3.6 trillion in the fiscal year 2012, current year that we're in. Total spending is $6.3 trillion and total revenues of around $5 trillion. So not real good at math here, but that leaves us short $1.3 trillion for the year. And so the two parties are divided on revenue and expenses. Let's talk about some of them on where some of the expenses go. Social Security, $769 billion. Defense spending, $708 billion. Medicare, $555. Medicaid, $259 billion. Others, which is entitlements and things like that, $473 billion. Interest on our debt, $238 billion. And then everything else, which is a broad category, $634 billion is comprises of the federal budget. That everything else, discretionary spending, is for law enforcement, homeland security, education, prison, NASA, housing assistance, etc. So the two parties are divided on their definition of revenue and expenses. One side wants to increase revenues, or another fancy word for taxes, while the other side wants to continue to eliminate some of the expenses that are listed in these categories. But they're divided, so we'll see which way we pick, as hopefully they'll come to a compromise that'll help us avoid a fiscal cliff here in the near future. So what's going on this week? Well, there's a lot of stuff going on out there that could be market movers. The Case-Shiller Home Price Index came in today, up 3% year over year. Case-Shiller Index is a survey of 20 big cities on their home value price growth over year, and 18 of the 20 cities that were measured came in with positive growth and continuing to show signs that the economic recovery is out there on the real estate front. Consumer confidence came in at a 4-year high today, the highest since February of 2008. Now stop and think about that. 2008 February, we were trying to figure out whether we were in a recession, going into a recession, or what was going on. Other things that are coming out later this week: new home sales, quarterly GDP, gross domestic product, on how we're doing, tells us whether we're growing, shrinking, or holding serve. Weekly jobless claims always have a big impact, and then personal income and personal spending all could be market movers. So we'll pay close attention to those as we continue to move throughout the week, but any one of those items could be a market mover. So what does that do to the rates? Well, rates are relatively flat and are trading in a narrow range. Got to be out on the lookout for any news that surprises the market and forces the bond market out of the narrow trading range. But for now, as long as the government continues to purchase the bonds, there's little or no risk in significant moving upwards. Got to be on the lookout for FHA, as they're going through a lot of changes, and they're proposing to make changes to the mortgage insurance premiums. That could have a significant impact on the total monthly payments for future homeowners and future refinances. But for now, both FHA and VA loans are still trading in the low 3% range for 30-year fix, so it's a great time to consider buying or refinancing in that regards. So as we continue throughout the week, it's Mike and Rick. We'd love to help you in any way we can. If there's any questions we can help you with, give us a call. Have a great week, and we'll talk to you soon.